Hi, everybody. I am Steve from Omni Productions, and I want to thank everybody for joining us on this very unique presentation. As a small business owner, I know I and most of you find yourself in a very unfamiliar place. As small business owners, we're always, always dealing with things that we don't know how to look around the corner, and we usually navigate them pretty well. But this corner is a little steeper and a little tighter than any one we've ever seen before, and there's a lot of questions. As you all know, the Congress and the President recently passed the CARES Act, and there's a lot in that CARES Act. Some of it that helps individuals, some of that helps larger companies, some of that helps small business. Today, what we're going to be talking about mostly is a provision of the CARES Act that is called the Payroll Protection Program. To that end, what we've got is a couple of guests who are going to join us. We have a panel of small business owners. We have Susan Sutherland Miswood from the Just Events Group. We also have Bob Hyde from We Are Chimera, which is a marketing firm. We're going to be playing the role of the small business person, just trying to understand what all of this stuff means and how we can make it work. To answer those questions, we have two distinguished guests. First, we have Congressman Darren Soto from right here in Central Florida, who is going to field our questions and hopefully try to shed some light. Say hello there, Mr. Congressman.
Thank you, Steve, for having me on the show. Look forward to answering everybody's questions.
We also have Marcos Marchena from the firm of Marchena and Graham, also a business attorney and consulting firm right here in Central Florida. Marcos.
Good afternoon, Steve. Thank you. Look forward to our conversation.
Great. With that, let's get right to it because that's what everybody really wants is to get to it. We've broken down our questions into three basic categories. The big picture questions about the PPP program, how the loan forgiveness portion of it works, and how do you make it work? What are the next steps if you decide you want to take advantage of that? So we'll start off with the big picture questions, and I'm going to jump right in, and other members of the panel, feel free to jump in as well. I think one of the biggest questions that people want to know is who's eligible for this kind of a program. On Facebook, we had 5 different versions of the questions. Hey, I'm a subchapter S, I'm an LLC, I'm a sole proprietor, I'm just a freelancer. Do I qualify? And I think that's the first thing that we want to address. With that, I'll throw it up to you, Congressman Soto. Any thoughts on that?
Yes, Congress has provided a broad definition of small businesses, including small businesses with 500 employees or less. This includes for-profits and nonprofits, sole proprietors, LLCs, LLPs, partnerships, and any other type of business you could think of. Yes, one-person self-employed companies are included, such as independent contractors, and all gig economy workers are included as well. So it's a pretty broad definition.
Great. Another big question that I think, or Marcos, do you have anything to add to that before I move on?
Just very quickly, as a corollary to that, the ownership, someone has asked, what does the ownership of the business have to be in terms of American citizenship and so on? If it's a company and they are created legally in the United States and they are based here and they pay taxes here, then they don't really look behind the curtain to see the detail of the ownership of the business.
Very good. So it's a really broad swatch of small businesses with less than 500 employees. And that's good news for a lot of folks, especially in our business where so many cameramen and lighting guys and audio guys are independent contractors or sub-S's or LLCs, but they're one-man bands or one-woman bands. So that's great news. Another question, a big picture, is how much can I borrow? And that's the million-dollar question, or maybe a much smaller question depending on how big your payroll is. Marcos, can you walk us through a little bit about how to figure out how much an individual small business can borrow?
Sure. And this is looking back. So the date of the loan sort of marks both looking back and looking forward. But let's assume for our example that the loan is made in the beginning of April. So you would look at the last 12 months of payroll, average it, come up with a monthly figure, and multiply that times 2.5, and that's your maximum loan amount. So here's an example. Let's assume that you paid $1.2 million in payroll last year, just to keep it really simple. You divide that by 12. That would have been from April 1 to March 31. You divide that by 12, you come up with $100,000. $100,000 average monthly payroll times 2.5 would give you a maximum loan amount of $250,000.
Pretty straightforward. Congressman, is there any other details that small business owners should be thinking about on that front?
Sure, and I appreciate Attorney Marchena's explanation on how to calculate a lot of this. So let's start by the fact that you can borrow a $10,000 emergency loan, which you should be able to apply and receive in 3 days or less. So that will be probably the first lifeline that a lot of businesses will receive. Then, of course, we have the Paycheck Protection Program, and you could secure the larger payroll protection loan of 2.5 times average monthly payroll costs, up to $10 million. And Attorney Marchena talked about the calculations of it. And I just want to add that the payroll costs, this is another broad definition, and you'll see this continued theme of Congress wanting to make this as broad and as simple as possible to cover as many small employees or many small businesses as possible. It includes employee salaries, wages and commissions, payment of tips, payment of vacation, parental, family, and sick leave. These costs may also include costs for group health benefits, including insurance premiums, payment of retirement benefits, payment of state and local tax assessment on employee compensation, and income for a sole proprietor or independent contractor not to exceed $100,000. The emergency loan can be rolled into the payroll loan. So you really can start with that emergency loan and then just continue on with the payroll protection loan. There's going to be no personal guarantee or collateral required. And they'll require you to submit prior payrolls, and we'll get into more documentation later that you've already submitted to the IRS in the past. And you're also going to need to sign a document that states that you're not going to be trying to seek another duplicate payroll loan. This is really meant to be one per small business.
Well, that is really quite broad. So it sounds like if I was just the layman, and I don't do my own taxes and I don't manage my own payroll, it sounds like anything that a company spent money on for the purpose of employing people and all of the benefits that go with it are included in the calculation to determine the loan amount. Did I understand that right?
I generally agree with that statement. Obviously, we've given an exhaustive list. So that, in essence, is most payroll and employee costs that I could think of as well.
Very good. Another big question that a lot of people have had, and then after we get to this is the last question of this big picture, I'd like to invite my other small business panelists to kind of jump back in here so we can close this segment out. But a big question is about the time period of this whole program. There's dates for it to start, there's dates for it to end. Is there deadlines for the application? How late, like if somebody's doing really well right now, but then their business falls off the cliff in June and they want to take advantage of this, what is the time period that this program, the Paycheck Protection Program specifically, calls for?
The deadline is June 30th of this year. And you'll see as a broader theme, we're trying to essentially take the extraordinary step of floating payroll for millions of businesses for the next 2.5 months, knowing that various states will have peaks to the coronavirus crisis at different times. For instance, in Florida, we could see our peak as late as May 3rd. So we really want to help early states like Washington and New York, as well as Florida. And of course, there may be other legislation going forward should we need to have relief further than June 30th. But you can apply up till June 30th, which is the deadline.
Very good. Bob and Susan, what additional questions has this discussion brought to your mind that you think people might like to know about?
Well, I have a question regarding the $100,000. Does that mean that if a person earns more than $100,000 during the payroll, that you consider up to $100,000, or that person is excluded from the payroll calculation?
If you're a sole proprietor or independent contractor, you cannot get a payroll for 2.5 months that would be as far as annually over $100,000. So in this instance, we'd be talking about a payroll of, somewhere between 8 or 9,000 to get to that $100,000 threshold. So for you sole proprietors and independent contractors who make over $100,000 a year, you're going to have to scale that back to it fitting into 100,000 annually. And then of course you'd be entitled to 2.5 months of that payroll under the payroll protection program.
Congressman, let me jump in there real quick because I do have a quick question. Oh, I'm sorry. Go ahead, Marcos.
I was going to ask the congressman, I was under the impression that the $100,000 limitation applies to all employees for purposes of determining the maximum loan amount. So if, for example, a company were to have 3 employees that made $150,000 a year and 10 employees that made $75,000 to $80,000 a year, you considered the full payroll for those making $100,000, and for the 3 that are making $150,000, you would only consider their first $100,000 in then determining the monthly average. Is that your understanding as well, sir?
That is my understanding. I was referring solely to the sole proprietor independent contractor question as it was posed, but there are broader rules for multiple employee or contractor payrolls, and I believe that that's correct. Thanks for that addition, Attorney Marchena. That's very helpful.
Bob, do you have anything?
Yeah, just one question. Congressman, when you were talking about the emergency loan, the $10,000 piece at the beginning of this, is that something that will come out of the loan for the care package, the payroll protection loan, or is that in addition to?
So that can be rolled into, and I believe the caps apply, although Attorney Marchena is welcome to supplement on that, or else my office can get back to you. But basically how it would work is you would apply immediately for the $10,000 emergency loan, and then that gets rolled into the larger loan that you would qualify for based upon the 2.5 months of payroll. We know that it'll take a few days for this to roll out, and we'll talk a little bit more about that in this program, about the timetables. But this is a quicker loan to get, knowing, having had a small business for 15 years and having had to make a payroll twice a month, I know that people are at the end of their rope, so many small businesses. So Congress understands that too, and put forward this emergency loan so it could be turned over relatively quickly over the course of 3 days to get that quick cash infusion so many of our small businesses need right now.
Thank you.
All right, so that kind of addresses some of those big picture questions, and we will be providing links in the comments that are related to those things, especially the $10,000 emergency loan, which is really not part of the PPP, the Payroll Protection Program. The next big question that a lot of people have is this a grant? Is this a loan? How does this work? And for that, I'm going to ask my colleague Susan to go through some of the questions that she's been getting from the small business community.
Excellent, thank you. So yes, the first question is that, there's all sorts of conversation about the loan not having to be paid back if it's used in a particular way. So can you go into, what part doesn't have to be paid back, how we track and prove that? I guess that's the first part of the questions that we have.
Absolutely. So let's start with Congress's intent. We wanted to make sure to give extraordinary relief to small businesses to make sure we could keep Americans on the job, knowing that this is an unprecedented crisis and an unprecedented decline in business because of the coronavirus. So first, the loans can be 100% forgiven provided that the small business maintains 100% of its average monthly payroll for the next 2.5 months until June 30th, 2020. So if you keep everybody on the job and you keep that payroll the same, we are going to pay it for you. Recently terminated employees can be rehired prior to the next payroll period to get full loan forgiveness. I know a lot of small businesses weren't certain what was about to happen, and many may have had to do what they had to do by terminating employees already. And now that we have this program, you have a certain amount of time before the next payroll period to rehire and, of course, pay them for that time period and get that money fully paid. A borrower seeking forgiveness for its loan is going to have to submit documentation verifying payroll and numbers of employees during the covered period, documentation verifying other reimbursable costs such as mortgage payments, rent, utilities, which you could also use the loan to spend on, and a certification from the borrower that such documentation is true and correct. The lender will issue a decision on the application for forgiveness within 15 days after receipt of the application. Within 90 days after determining the forgiveness amount, the SBA will remit the payments directly to the lender. If you do terminate employees or otherwise lower your payroll anyway, this is not an all or nothing proposition. You'll still get credit for the percentage of average monthly payroll you maintain through June 30th, 2020. So if you maintained 80% of payroll, and we talked about that overall expansive payroll costs early on, that includes far more than just salary, benefits, and other items. As long as you maintain that percentage, let's say 90% through June 30th, then you'll have 90% of that loan forgiven. And I know those are a lot of rules, but I know our small business owners are up to the challenge. That's how you all got into business and how you became a success. And for any questions, certainly you're definitely going to want to speak to your local attorney or accountant based upon the subject matter as well. That always helps, right, Attorney Marchena?
Yes, sir, Congressman. Thank you. I was grinning because that's a very detailed, very thorough explanation of the rules. And if you will allow me, Susan, I would just give you an example. Okay. So let's assume that you spend the loan funds on all of the allowable expenses. So when you go to apply for the loan forgiveness, you're going to look back at your employees between March 1 and June 30th of 2019. And let's say, for example, that you had 14 employees during that time. And when you look at the number of employees that you have from the time you got the loan through the 8-week period that the congressman is talking about, you have 11 employees. So when you go to apply for the loan forgiveness, you will be able to apply for 11/14 of the loan amount to be forgiven. The balance you'll have to pay back over a period of time. So that should give you an example of those very detailed rules that the congressman gave you. There's another rule that I think is well explained by an example. If you have reduced the compensation of your employees, if you have reduced the compensation of certain employees below 75% of what they were making, then you will also lose forgiveness on the loan dollar for dollar of the amount that the salary was reduced below 75%. Those are the two areas that I think are really important for the small businesses to understand.
So allow
So
me, if
just
I
to
could, to
follow
jump
up
in
on
real
that.
quick.
Oh,
Yeah, if you don't mind, Susan, I just want to kind of summarize real quick and make sure that I understand it. The purpose of this whole program is for us to not lay off or furlough people or cut their hours, to the point where, it's causing the economy a problem. So long as we maintain our payroll in the way that we had it, or largely in the way that we had it, those funds from the loan will be forgiven. And to the extent that we don't, we will have to pay back that loan. I want to try to make sure that it's a very simple understanding. Do I have that right?
That's exactly correct. It is our intent in Congress to keep Americans employed. We know this is an unprecedented crisis with a huge business interruption. And so we have taken the unprecedented step of floating payrolls in the next 2.5 months with a $350 billion fund. So if you keep people employed, you should have 100% forgiven, provided you keep the same payroll costs.
Great, thank you, Congressman Soto. I'm
And
sorry
then
to interrupt
just-
you, Susan. Please continue.
Yeah, and just to clarify, then also, I know that if a small business has had to lay someone off and they bring them back, that's acceptable. What about reducing hours? If we reduced hours and therefore compensation, and then we bring them up to speed again, is that likewise counted in this?
Yes, it actually works in your favor. The whole idea is to encourage you to both hire back employees that you had to furlough or increase the compensation of the employees whose compensation you had to reduce.
Excellent. And then for the amounts that aren't forgiven, what are the terms for that?
So for the amounts not forgiven, the loan terms are pretty familiar for those of you who had SBA loans before. Will be a 6 to 12 month deferral period on payment. Then there'll be a 10-year amortization schedule. Interest rates will be capped at 4%, no prepayment penalty. One of the major differences, though, in addition to not needing collateral or personal guarantees, we've waived most fees, including the annual fee and the guarantee fee. With the exception of it being a simpler process with far less collateral or other security paperwork, a lot of fees are waived, but the rest are pretty standard terms for an SBA loan.
Great. Thank you so much, Congressman.
Hey,
My
Bob, what
pleasure.
questions do you have on this, on the topic of loan forgiveness before we move on to the application process and next steps?
One of the questions is, are there restrictions on what I can use the funds for? Obviously, they're for payroll and whatnot, but should there be extra money around? Can I use that if I want to take out, if I want to repay it as a loan? Can I use it for anything, or are there restrictions?
You can use it for normal business expenses, broad range of expenses such as rent, utilities, and supplies. However, you must maintain the average monthly payroll to get 100% of it forgiven. So I anticipate some people, they will borrow to meet that payroll need, and they may have some wiggle room to spend some of that additional money, but many others will probably just borrow additional money on top of the payroll, and then they'll have that standard set of loan terms that I already discussed. But yes, we're here to help with all other normal business costs that small businesses have in the ordinary course of business.
That's great. Thank you.
So before we move on to our next topic, I want to clarify something because I may have been misinformed a little bit too. My understanding of this, and please illuminate me, Congressman and Attorney Marchena, is that the forgiveness process was based not just on payroll, but also using those funds for other qualified expenses such as rent, insurance, and so forth and so on. Are you saying that the forgiveness is based solely on payroll, or can you also use the funds for those other elements that are approved, like rent and insurance and I can't remember some of the other ones, utilities, I think, to calculate the forgiven amount?
So as long as you pay the full payroll, all costs could be forgiven. You're going to have various different scenarios that small businesses will be in. Some of them may already have some money to float that payroll. So they'll be able to use additional money from just the 2.5 months of payroll for other expenses and still meet that requirement. Some businesses will have no cash flow whatsoever. And so they're really not going to have much wiggle room with a 2.5 month payroll loan because they don't have any other cash flow to pay other things. So in that instance, you'd see them have the opportunity to borrow more than that. Let's say they borrow what's the equivalent of 3 months payroll. They would, to pay those other costs, you're still going to have that excess left over that you're going to have to go into a normal loan. So your cash flow is really going to dictate whether you can maximize and leverage the loan for these other expenses or not. And feel free, Attorney Marchena, to chime in, because it's going to be very different for very different businesses depending on their ability to float part of their payroll already.
Sure. Thank you, Congressman. Steve, for purposes of the loan forgiveness, the analysis is comparing your payroll during the loan period, the 8-week period after the loan, to your average monthly payroll last year, March 1 to June 30th, and comparing the compensation during that period to the compensation of each employee before the loan period. So that is for determining loan forgiveness. What can it be used for? As the Congressman said, is a fairly broad business expense area or set of criteria, as long as you are maintaining your payroll. That's why it's called a payroll or paycheck protection program.
Got it. Understood. Thank you for the clarification. Does anybody have any other questions from our small business panel on the forgiveness process?
Yeah, I don't want to go too far into another type of loan, but another question popped into my head. But we'll just keep it simple. So then, should employers be applying for different types of loans, as in the SBA disaster loan that we applied for a couple of weeks ago, as well as the payroll protection program? Are they two different things, and should we be applying for multiple things?
The disaster loan is a separate type of loan. It is my understanding that could also be rolled into the ultimate loan, like the emergency loan. So I would encourage small businesses, in conjunction with their attorneys and accountants, determine what portfolio of loans is right for them.
Got it. Thank you.
Actually, that actually poses a question for me as well. So for argument's sakes, to use Attorney Marchena's example, if you had $1.2 million of payroll last year, you qualify for up to $100,000 loan under the payroll protection program. Does that mean that we can?
For $250,000.
Excuse me. Yes, thank you. 2.5 times that 100,000. So does that mean that I can also apply for this $10,000 emergency loan for a total of 260? Or is the $10,000 of the emergency loan, does that reduce the amount that I can borrow under the PPP?
It's added to it. It does not reduce it, from my understanding. We wanted to have this quick injection of $10,000 in cash in a 3-day turnaround period as this first quick lifeline for those who need it, and then to be able to fully roll that into the larger amount without limiting the 2.5-month payroll amount that you could get forgiven. And of course, you could borrow above the 2.5-month payroll amount. You'll just have to pay those amounts back with in the terms are discussed, if you don't maintain the 2.5 months payroll.
Understood.
So going back to Susan's question, Steve, I found a provision here that I think answers a part of this question. If you took out a disaster loan under the SBA 7B loan provision, that amount will be added on top of the maximum amount that you can borrow under the Paycheck Protection Program.
Great.
So in my example, let's say that your average monthly expense was $100,000. You can borrow 2.5 times that, of 250. But let's say that 3 weeks ago you took out an SBA 7B disaster loan for $75,000. You would then add that to the $250,000 for a total loan of $370 or $325.
So the rules are pretty broad, and they're really designed to help businesses get back on their feet. Thank you both for helping illuminate that. We are actually running pretty long, so we want to go ahead and move on to our third thing, which is, what do we do? I want to apply. How do I do it? And for that, I'm going to ask Bob Hyde from Chimera, We Are Chimera, to help us ask some questions that people are asking. Bob?
Thanks, Steve, and thanks for anticipating my eagerness to get started on this thing. Um, One quick question. The SBA has not been known for the simplicity of their application process in the past. Um, but everything I've heard and read about this is it's supposed to be a simplified process. How simple is it? What documents do I need to put together?
Thanks for that great question. It's Congress's intent to keep this process as simple and expedited as possible given the coronavirus crisis. So we've waived most requirements, especially with regard to security like collateral, because our goal is to keep Americans employed for the next 2.5 months. SBA is working through guidelines, but to apply, you can reach out to over 1,800 participating lenders or to the SBA or SBDCs if you don't have an existing lender or you have a lender that is not participating. The documents you'll need to gather before you apply, you'll need specific information and documents to provide the lender with the need to evaluate the SBA loan. You'll need to know about much of the money that you'll need to borrow, including the payroll costs, like we talked about before, your utility expenses defined as electricity, gas, water, transportation, telephone and internet access, and services that began before February 15th, 2020. So there'll be a short application and then the normal business records to show your payroll costs and business expenses such as utilities. And one other thing I want to mention is that we recently had Treasury Secretary Mnuchin state that business loans will likely start this Friday, April 3rd. And we encourage people to contact their lenders as soon as possible.
Congressman Steve, if I may.
Yes, please.
Congressman, you mentioned, I'm glad you mentioned a simplified application. Some of the lenders with whom I work have indicated that for now they're having people fill out the SBA 7A loan application. But as you know, that application is pretty lengthy, requires lots and lots of documentation, requires a show of ability to repay, etc. If I'm hearing you correctly, you are expecting the SBA to come out with a far simpler form than the 7A loan, correct, sir?
I am expecting the SBA to come out with a far simpler loan application. And according to Treasury Secretary Mnuchin, we should see it this Friday, April 3rd. And as you know, Counselor, because there's going to be no collateral, all these aspects of security or credit worthiness or all these other things aren't going to need to be verified. What will need to be verified is your payroll costs, which also the IRS has, and your utilities and other similar business costs. So it's far less of a verification process, which should cut down drastically on the paperwork. And that is, of course, our intent to get this relief out quickly.
Thank you.
That's great news. Thank you so much, Congressman. Just one last question, if I may. I take it we should go to our bank or our business bankers. Is there a necessity to shop for rates, or is everybody pretty much going to be in the same pool as far as the rates they're going to be charging?
We want you to go to your existing lender. Should they not be participating, then you would go to the SBA. But I suspect with over 1,800 participating lenders that most small businesses lenders are going to be participating. You don't need to shop around because it's going to be a standard loan should you not get 100% forgiven by maintaining your payroll costs. Those terms we talked a little bit about before. There's the 6-month to 12-month deferment period. There is a 10-year amortization schedule, 4% interest, no prepayment penalty. Of course, most fees, including the annual and guarantee fees, are waived. No collateral or personal guarantee in general. So you're going to get those terms regardless of the lender you go to. My advice to small businesses: contact your lender today. Start getting the information regarding your payroll and your utility costs and other small business costs you intend to try to borrow for, and start at least looking at the 7A application to know the basic business identification information, because that's what you will likely need. But don't focus on the security aspects of it, or a lot of those other things related to collateral, because you're not going to need those in the simplified application. We hope that will be out April 3rd, this Friday.
That actually poses a question for me, Congressman Soto. We're talking about, we're using the word bank generically. A lot of small business, one-man band operations, and use a credit union. If that credit union is already 7A approved for SBA loans for small business, we can go to them as well, right?
Thank you so much for that clarification. Yes, any SBA approved lender, and I meant that broadly, but I interchanged bank, I think, without the distinction that credit unions, of course, also would be lenders qualified should they be an SBA qualified lender.
And I also think I read in a summary that if a lending institution, whether it's a bank or a credit union, was not yet qualified, that there is a fast-tracked process to get them qualified. Is that correct?
There is a fast-track process. I will be doing all oversight I can to make sure that it is actually a fast-track process. And that brings me to another point that I do want to make. We know whenever you have a major rollout of a government program nationwide, it is always challenging, from rolling out Social Security to Medicare and Medicaid to the Affordable Care Act and the stimulus checks that we had under the Bush administration, to this rollout. It's going to take continued oversight, and we did our best to make these the guidelines, the restrictions under law, be as broad as possible. But we need your continued participation and feedback, both on this program and in a town hall I'll be having tomorrow, April 1st, with small businesses. And you'll hear a lot of similar information that you heard today, probably more generalized on the onset. But it's absolutely important that we get your continued input so that we can do our oversight job.
Susan, did you have any additional questions on this, the application process?
Well, I think on this same list, and forgive me if I missed this, but once the application is done and you're approved, how long does it take to get the funding in our accounts?
So that question has not been answered yet. They're still working on the guidelines. We did put in a 3-day rule for the emergency loans, but that's one of those oversight aspects. Attorney Marchena, you may be able to weigh in on this based upon your experience with some of these SBA loans about what you think the turnaround time may be.
Yeah, there may be a little bit of lag time from application to closing, but really once the loan closes, the funds should be available to you within 24 to 48 hours.
Excellent, because in my industry, everyone's at a dead stop. So I know people are so eager and anxious to have this move forward, and we appreciate, all the work that Congress has done to get this forward to us.
It's our pleasure. You all have been working so hard over the years to build up your businesses. This is no one's fault. No business is culpable in this having happened, unlike in the recession when we saw certain large businesses in Wall Street have an effect on the economic recession that we had back a little over 8 years ago. But this is no one's fault. And so we need to do our best to step up and continue to protect what you all have built with your blood, sweat, and tears over the years.
Well, Congressman Soto and Attorney Marcos Marchena, on behalf of Susan's and Bob and I, thank you so much for taking the time to answer these questions. We know there's probably going to be a lot more questions, so we may want to invite you back for another episode at some time in the future. If you're watching and you have additional questions, please put them in the comments below here on Facebook, and we're going to do our best to get those answers. Future episode that we're planning is going to include representatives from our local banks who can then answer some of the more nitty-gritty details. Hopefully we can do that as early as possible next week, assuming Secretary Mnuchin and his team can get those slim-lined applications ready to go. With that, I'll close it out. Does anybody have any other quick comments before we lose Congressman Soto to another meeting?
I do have one quick comment, Steve. I can't help myself as an attorney. I want to point out to everyone that what we have presented here today is not intended as either legal or financial advice. And please confirm all of this information with your own attorney and friendly banker and CPA.
And there is the
Amen.
disclaimer from the attorney, ladies and gentlemen. Thank you guys for watching, and we'll see you soon. Thanks, everybody. Bye-bye.